how you doing? Welcome back to the channel. And in this video, I'm going to be talking about the 5 best stocks that you should be looking at to buy in March. These are great stocks, and I'm happy to bring you this list. In fact, this begins me bringing you these videos on a go-forward basis. I plan on bringing you a video like this every single month as we move forward, so that you can look at and investigate these stocks for yourself. I do some research on the net and just kind of looking at overall, what are some good stocks? What are some potentials? What are stocks that have some potential for growth in the future? What are some stocks that are poised to take advantage of certain market conditions? That's what we're going to be talking about in this video. The 5 best stocks that you should be looking at buying in the month of March in 2021. We're going to get started on that, and I'm going to tell you about that in just a minute. Before we do, I want to get a little housekeeping out of the way. Number one, this video is for entertainment purposes only. This is my disclaimer, not a stockbroker. And if you're going to invest, you should definitely invest on your own accord or seek the counsel of somebody who's more certified than me, okay? But again, I'm here to bring you value, just to make you aware of these opportunities and these stocks so that you can look at and go out and maybe might find one or two for yourself, okay? I'm also, by the way, a long-term investor. I like to look at buying stocks and holding them. And you may be different than that, but you could look at some of the stocks that I'm going to be talking to you about and maybe looking at them as short-term plays or things like that. Lastly, before we get into the content of the video, please consider subscribing if you haven't already done so. Apologize, that was my cell phone sending me a text. And please hit that like button because it greatly helps my channel out. I've got a few notes down here to make sure that I cover everything I need to cover for you guys. So with that said, let's jump into it and talk about what are the 5 best stocks to buy in March of 2021. Here we go. All right, so I'm going to go ahead and throw up on the screen the 5 best stocks that are going to be the ones we're going to be talking about in this video. I like to do that kind of so you know where I'm headed with this video. I would tell you that, once you see the list, don't tune me out. Don't click off the video. Don't go away. You're like, hey, man, I've already seen these or whatever, because I might have some golden nuggets for you, things like that. So stay with me, okay? So the 5 that you see on your screen are Alibaba, Viacom, Goldman Sachs, Disney, and Bumble. I was actually really surprised that Disney made this list because, frankly, Disney has been so negatively impacted with the COVID-19 pandemic and all that. Their parks have been closed, things like that. But what was shocking to me and opened my eyes was their Disney Plus service, that new streaming service. It's crazy how much growth they've got in that, and we're going to get to that when we get to Disney. So let's jump into the first one of the 5. And again, that's Alibaba, the Alibaba group. Okay, I got notes, so if you see me, I'm kind of reading just to make sure I give you all of the right metrics that you need. Okay, so right now Alibaba is trading at approximately $237, give or take. It's moving up and down maybe a couple points a day, but it's on a kind of a low. It's been dipping, and I think that may be the reason that it's looking at maybe why it's a good potential long-term investment. Okay. All right, so again, if you don't know who Alibaba is, it's my opinion, one of the largest Chinese e-commerce companies out there, and it took a dip in February. Okay, I want to make sure, again, I get this right for you guys, offering investors a nice chance in February to buy, but it's still definitely at a low, right? It's about 20 times forward earnings, and it has expected revenue growth of 39% in 2021. That's a really great, earnings revenue growth, and 30% in 2022. So still a lot of room there for earnings revenue growth. It remains a best in class. It's quality large cap stock. And they're the single guys that are kind of doing it the best as far as this large e-commerce kind of clearinghouse connecting Chinese companies with companies all over the world. Alibaba is a great one you might want to look at. It has really great fundamentals and is one that you should maybe look at picking up, again, if it fits your trading philosophy, okay? All right, the next one, again, is Viacom CBS. So, if you don't know who this is, obviously this is a marriage between Viacom and CBS that happened a while ago. CBS being, one of the major, news channels that's been in the United States forever. But it is a media and entertainment giant trading for about 15 times earnings, okay? Unlike Baba, it does pay the Alibaba group, by the way, so I meant when I meant Baba. It actually pays a 1.5% dividend, which is not real high when you're talking about dividend plays. I mean, to give you some perspective, AT&T pays a 7% dividend, right? Okay, but again, shares for the Viacom CBS have been on a run over the last year. It was beaten down by the pandemic, and because there was fears that ad revenue was going to go down because of the pandemic and all that kind of stuff, and that revenue from live sports would disappear. Excuse me. But you got to remember that sports are going to come back, right? So sports are going to come back. You might want to pick this one up. It's at a low, right? And that's it. So that's partly, I think, the trend that we're starting to see, guys, in these February, March, and probably going into April timeframes as we get more of a handle on the COVID-19 virus and more people are vaccinated. We're going to start getting back to normal life, right? And so again, this is a stock that might not be on your radar that's poised to potentially really, really benefit from that as more sports come back on. Viacom CBS starts to make even more ad revenue, and again, you're picking up the stock potentially at a lower price, right? But just to give you some perspective, Viacom CBS owns the following: Nickelodeon, Showtime, Comedy Central, BETV, MTV, Paramount, and obviously CBS, right? So they own they have a really great portfolio of companies inside this mix. Let me make sure there's nothing else I wanted to. And then they did launch a new paid service streaming called Paramount Plus on March 4th. Okay. Oh, excuse me. They will launch. I apologize. No, they're going to launch this, and I'm recording this on March 2nd, so they're going to launch that in 2 days. I didn't even know that. I didn't even know they were going to be doing that. This service will be available with advertisements for $4.99 a month or $9.99 a month for the ad-free version. Okay, so it looks like they're poised to, launch a streaming service, guys, and that's a really big deal. These streaming services are really, really pure revenue, and you got to remember Viacom CBS owns all those different platforms: Nickelodeon, Showtime, Comedy Central, etc. Guess what they're going to be doing? They're going to be advertising the heck out of their new Paramount Plus streaming service. So this is one you might ought to think about picking up. And it's definitely at a good point. Now it is at a little bit of its high right now, but I think it's going to continue to go up. So lastly, the company expects 70 million streaming subscribers and streaming revenue of $7 billion annually by 2024. Think about that. That new streaming service is really, really, really going to make a tremendous impact to their cash liquidity scenario, as well as revenue. Okay, so you might want to think about picking up that one. That's a good one, and frankly wasn't even on my radar, and now it is. I'm going to be looking at that one a little bit. Okay, Goldman Sachs. Goldman Sachs is our third one. I believe we're on our third one. You may be like, hey Austin, why did this one make the list? Well, look, here's the deal. Bank stocks are poised to make a return, and as the economy continues to get better, this is the overall trend and overall theme, I think, of this video, is that what we're starting to see is kind of the recovery scenario. We're starting to see that. And if you're looking at maybe how you want some bank stocks that are very conservative, and and obviously a sector that's really conservative, then bank stocks might be for you. Okay, and as the economy regains its footing, states and localities will gradually reopen. Vaccines are going to come online. Johnson & Johnson vaccines about to be distributed. And so banks are going to benefit from rising rates, right? Banks are going to start benefiting from rising rates as our economy starts to come back into the fold, and so they very well may benefit from this. Goldman's trading division has also been benefiting from its recent quarters, as frenzied market activity drove fourth quarter revenue growth of 23%. What does that basically mean? That means that Goldman Sachs trading division, where they're buying and selling and trading stocks for in their funds as well as individuals, etc., saw a 23% spike in fourth quarter revenue growth, because everybody's buying and selling stocks, right? Everybody's getting into the market and they're putting money in and things like that. So they're again expected to benefit from that. Okay. Right now it's trading at around $318, which is a little bit kind of close to its high of $335. So it's kind of, you're not buying at a dip. This is more of a long-term buy, hold, play if it matches in with your investing strategy. All right, the Walt Disney Company. This one was really surprising to me, because when I saw this one, and this one kind of came across my desk, initially I was very, I even frowned. I was even like, what the heck is Disney doing on this list? Because frankly, all I was really thinking about was their parks. I was thinking about all their parks and all the hotels and everything, and how COVID-19 has just decimated that, right? Now they're open, they're reopened, and you see their ads on TV, and people starting to go and more and more and more. But they were just pummeled by the COVID-19, and for the last year or so, they've just really struggled. Well, what I had forgot about was the Disney Plus streaming service. I just frankly wasn't even on my radar. Part of that is that my son is not in their demographic anymore. He's not a little kid, right? And it's just we don't own their streaming service. We're doing Hulu and Amazon and all that kind of stuff. But so that really wasn't kind of on my radar. Okay, and so here's what it really came down to. It's crazy the amount of people that are on their streaming service. Get this. I'm going to read this because I want to make sure I get this right. Okay. So Disney has 94.9, almost 95 million subscribers subscribed to their Disney Plus service. 95 million people are subscribed to their Disney Plus. I did not know there was that many. And this is what ought to get your attention. They expect that by 2024 to have 230 to 260 million people subscribe to their Disney Plus service. Isn't that staggering? Isn't that insane? All paying whatever it is, $7, $8 a month, and I know they probably got different levels and things like that, but it's crazy how much money that they're going to break in and bring in from their Disney Plus. And so if you guys, even if you put the parks aside, put that aside. I mean, obviously, we haven't even talked about their movies and things like that, and their content they're creating. They can go directly to their Disney Plus service, things like that. So Disney, the Walt Disney Company, is absolutely potentially a great one. Now, it's currently trading at approximately $189. It's trading again kind of close to its 52-week high, but I think that this one you might look at. Think about that. 2024, 230 to 260 million subscribers to Disney Plus. Think about the bottom line revenue growth and everything that they're going to do. I mean, Disney is, its executive staff is, led by, Bob Iger, I always say his name wrong, their executive staff is legendary. Their executive staff have their act together, and they are a very well-run, well-managed company, and that they're looking 5, 10, 15 years out, and Disney's one that you might ought to think about getting into and holding, and because it could be a good one just based off the Disney Plus stuff, guys. I mean, seriously, it's crazy. All right, the last one on the list is Bumble. Bumble is probably one of the most speculative one on the list. But the greater risk is directly accompanied by the greater potential reward. It's got really good fundamentals, but it's kind of this is more of a speculative play. So let me see. Only two major companies in a highly concentrated and growing industry. They're second fiddle to the much larger group, Match Group. Bumble's valuation is more than $8 billion. Okay, a fraction of the $41 billion that Match Group is. Let me see. I'll make sure that I get this right. The stock jumped to more than $84 a share on the first day of trading, but now trades around $70. Right now, as of the video, recording this video, is trading at about $67. Its 52-week high is $84. Let's see. Although it's certainly possible shares recede further, long-term investors should be encouraged by the performance of their bigger peer, right? The Match Group. So basically what they're saying is, look, they're really the second player in this group. The biggest player, Match Group, is $41 billion with the valuation of that. They have $8 billion. They have a tremendous amount of upside revenue. They have great brand recognition, things like that. And they could be a really, really good one. Okay, so this one definitely wasn't on my radar until I started doing a little bit of research, and I saw this one. I'm like, you know what, this is a good one to put in. It's not one that a lot of people will talk about, but probably if I had to really tell you the two that are on this list that really got my attention were Viacom, CBS, and Disney. And it really comes back to those streaming services. Viacom, being a large conglomerate holding similar to Disney, right? Could be some that you might want to look at. So guys, I'm going to wrap up the video there. These were the 5 best stocks that you should be looking at maybe picking up in the month of March 2021 and holding in long term and whatever your trading strategy is. Hope you enjoyed this video. I greatly enjoyed putting it together for you. I learned a few things. The whole Disney thing, I think I'm going to go pick up some Disney stock for myself. Again, I'll see you in the next video. Take care. God bless.